of what's going on, the drop from yesterday, the rebound today, Bitcoin tapping down just under 99K, XRP being around that $2.06 range. First, I'll start out like this. The content, our direction, the way I show things, the way that I try to make it sink in, I think there's an evolution that can happen and a lot of good input from a lot of people, a lot of things that I see, a lot of things that I hear. And I think the best way to do this is one, yes, I love going through the charts. I love doing it like that. But I think a more profound way of showing some more visuals as far as, okay, XRP is doing X, Y, and Z, but this means this, and then have some kind of representation that might show it, that might make it easier. Because for me, like, I'm a visual learner. So when I hear something and see it, seeing and hearing at the same time makes it seep in just a little bit more. So maybe going through and being like, okay, we're looking at this, a possibility to do a drop here. And then instead of going on farther from that, getting a liquidity map out, getting an area of actual, maybe a scattered area of where money is built into these particular assets where there's more of a buying and selling demand zone. Maybe the oscillate, opening it up and making it an easier way to tie it in. So I'm trying to figure out in my own head a way to evolve this more in, okay, here's the knowledge, but now here's the reason why we have to pay attention to these levels even closer, even more than just like, oh, here's the heat liquidation map, but maybe so there's something like that. So but I'm going to do a better job too of just putting it out there instead of blah, blah, blahing it. Just, this is the way it goes. I'm not a financial advisor, but this is my plan. Simple, easy, straight to the point. So I'm not a financial advisor, but this is what I'm doing. And that's the truth. So good morning. 10:19 a.m. Eastern Standard Time on this Wednesday, November 5th, 2025. I'm XRP Future Millionaire, and I reside in the great state of Michigan. Well, we've been doing this for almost 5 years. Once we get into March, it'll be 5 years. So there's been a lot of evolution, and there's always improvement. Always room for improvement. From me, from you, from everybody. It's a dead cat bounce, some people say. Welcome in Iran. Dan Marginal, Josh Jolly, and Mike B. Good morning, and thanks for being in time zone for 3+ months with the XRP Meteor. Anna, welcome in. I'm so blessed to see you in here. Good morning. She says, hi, Tom and friends. Good morning to you. Jay from Mix, welcome in. Joseph Euler and the Cannabis Podcast, good morning, and thanks for being in Tom's Army 6+ months with the XP Predictor. A lot of our good friends in here this morning. 1970 Legend, welcome in our fellow Buckeye. I'm sure he's very happy today being number one in the college football playoff, first rankings, as if there was a doubt. The defending national champion and doing something Michigan couldn't do in trying to defend that national championship. So welcome in, and thank you for the 10 gifted subs as well. What a generous person you are. Unbelievable. And those gifted, and now in Tom's Army over 1 year as well with the I Told You So badge. And also a very trusted mod in here during the lives. Awesome. And they say a Wolverine and Buckeye can't be friends. Ellis Wiggins, Brandon Sanchez, Silent Giant, Aro, Emmanuel Daniel, and Black Viper. And also Ted. Congratulations on getting the month 1 gifted sub. I love seeing that. Brad Jones gets a second month in the Dusty's Outhouse Crypto News. And Captain Brandon, welcome back into Tom's Army for 3+ months with the XRP Meteor. Maybe this will inspire some of you who got the gifted subs to continue on in Tom's Army. Or maybe gift one yourself to a fellow viewer. Such generosity. Thank you so much for that, 1970 Legend. Raleigh, we still can't seem to get you a gifted sub. Gift a sub for Raleigh, but we can't target it, and for some reason it won't give her the sub, and she's here every single day. I always tell people, make sure you hit the accept button, because you can decline the gifted subs. It'll ask you one time, and if you hit no, then you'll have to go back into your settings and change it to yes. Mrs. Stott, welcome in, and All the World Stage, good morning, and thanks for being in Tom's Army 3+ months with the XP Meteor along with Mike B. Let's see, who did I miss? The Canvas Podcast said, morning, we're at a 20 on the Fear and Greed Index. Yearly low was March 10, 2025, and we continued up after that. We then retested and continued higher. Oh, we're doing exactly what I wanted it to do now. I would like to see, well, we'll get into this after. I want to get into this in a direct way. Not, I'm going to say it, bounce around. Nope, we're going to do it more in a direct way. Right now, saying hello to my audience, and then we'll move on, because everybody deserves to be said hi to. Because maybe I'm the only person who says hi to you throughout the day. Scotty Trades, good morning, and thanks for being a very trusted mod in here, along with the Fine Group and Crypto Cooter in here and in the Telegram. The Fine Group and Crypto Cooter 6+ months with the XRP Predictor, and Scotty Trades in his second month of Dusty House Crypto News. Good morning, Crypto Cooter. Scotty Trades says data can be stat. Oh, he's talking to somebody else. But good morning, Scotty Trades. And Define said, hey, everyone, hit that like on the way in. Consider subscribing and joining Tom's Army for the best technical analysis on YouTube. Ditto. I approve this message. Thank you, Define, for everything. And then some. Mr. and Mrs. Stott, thank you so much for being in Tom's Army 3+ months with the XRP Meteor. And along with Captain Brandon. I think I already said that. James Dula as well with 3+ months. Thank you so much. And Just Send It and Mike B. Greatly appreciate all of you as always. Ben Graham, good morning. Mosey here. Vado Damas. We'll get into the meat of this right now in a second. Vado Damas, thanks for being in Tom's Army for over 1 year with the I Told You So Bad. Sola Jeffy, second month with the Dust House Crypto News. John Bugathorpe, good morning. Damon Smith, thanks for being in Tom's Army for your first month with the Emoji Badge and me being abducted by aliens. Greatly, greatly appreciate that. Good morning to you. Silver Hayes also in his first month. Appreciate you, my friend. Joey McCaffrey, and it's all in illusion 6+ months with the XRP Predictor. Beautiful souls in here this morning. A lot of good supporters in here. Should be a fun live this morning. VJ, thanks for being in town. Or VGTV, thanks for being in your first month with the Emoji Badge and me being abducted by aliens. Says respect you, TA, some of the best on YouTube. I appreciate that. I appreciate that. I know there's better ones, but I'm glad to be up there with the better ones. According to you, I appreciate that. Yes, the Ripple swell event is going on. A lot of people are expecting this to pump through. We'll see exactly how this plays out, whether it ends up being a buy the rumor, sell the news, because now the rumor of the swell event after the big dump, is it going to pump into it and through it, or do we end up getting some kind of depreciation as it goes on? That's the question we all ask ourselves, and maybe the charts will let us open it up just a little bit here in a minute. Dirty Train, good morning, and thanks for being in Tom's Army 6+ months with the XRP Predictor. And Brian Murphy, thanks for your first month as well in Tom's Army, talking about the Ripple swell event. I love it. BlackRock sold 800 Bitcoin. Maybe it finds its way into XRP. You never know. You never know. Crypto Cooter, it was fun watching that slow drip. It always is. XR Perfection, welcome in, and thanks for being in Tom's Army for over 3 years with the XRP Diamond Hand Badge. That still tickles me a little bit, seeing people in Tom's Army for that long. Thank you so much for that. That is perfection. Mike B, thanks for not only being in Tom's Army for 3+ months with the XRP Meteor, but also the gifted sub. Rizo got the gifted sub. Congratulations on being in your first month in the Emoji Badge and me being abducted by aliens in Tom's Army. That's awesome. Look at the generosity. So many comments. JUK, welcome in, and thanks for being in Tom's Army for 6+ months with the XP Predictor. Evernote spoke about XRP and at swell yesterday. Excellent. 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 Rick, thanks for being a very trusted mod in here as well. I appreciate it. So let's get into this. XRP looks like a possible completion still. It definitely broke down out of the short term. So I guess before we can get into XRP, what is the granddaddy of them all right now? The granddaddy of them all right now is Bitcoin. The biggest problem with Bitcoin is still, if you go into the much larger rising wedge that you can, and if we get rejected because right now I don't have it set up in the short term, that rising wedge that broke down the smaller one, but there's a much larger rising wedge that you can draw this into, and that could technically take us down to 75K. I've chosen to keep it more to where the audience doesn't jump off a cliff and build it almost in to what could be an ascending triangle at 92K if it holds, maybe. But there's some obvious issues that are going on with this chart. And now that it built this out, you can honestly look at this and say, what's really going on here? Like, is this really a rising wedge building, or is this... But that doesn't mean it would break down. You could still look at it if you look at it like this and say, well, then it could come back up here. Maybe we top out up here at 134. These are all the things that we ask ourselves this morning. The first area we need to get back over, though, and this is not debatable. We talked about it yesterday if you were in here. First area we need to retake is this short area, 104,389. That's what we're coming up to right now to try to decide if we can get back up into that range. That's going to be our first... That'll be our first understanding of the day if we've got something tipping the scales here a little bit. Also, the 20-day we're going to run into at 105,000, which is very important. If you don't know what the exponential moving averages is, I think this is a good time to show you. Now, I can tell you every single day like I do, which I will, real quick before I get into a definition, but I think just having a visual understanding, because I can't expect everybody to be in their 5th year watching me. It's becoming more and more clear that I've got to make it seem, or I've got to make the content out as if it's your first time you've ever seen this. So even if you've been here for 5 years with me, you're just going to have to deal with it. And we're just going to keep rehashing it out. And guess what ends up happening? With repetition comes understanding. With understanding comes the ability to do, and by doing it becomes a repeat of repetition, and because you can do it and repeat it and then now you can regurgitate it. So now not only can you repeat it, you know, now you can end up pushing it on to somebody else, and they're like, well, what the hell is an exponential moving average? And you're like, oh, well, that's the blah, blah, blah. So in this case, I like to use the 20, 50, 100, 200. 20 days in red, 50 days in orange, 100 days in light blue-ish, green, I guess, greenish blue, I don't know. And dark blue's the 200-day. So basically the 20 days, everybody trading from the last 20 days. This is everybody trading out there in the abyss for the last 20 days. And this is the trend line. And as you can see, it's moving down. Well, right around here, we had a nice push up. But that was just confirmation of kind of a pull down. So for the 50-day is everybody trading for the last 50 days. And this is the converging line. And the 100 days and so on to the 200. Well, obviously the 20 days is more volatile. It's less information. By the time you get to the 200, it's more steady because you've got a bigger base of information. So now as it starts crossing, if it goes up in the upward direction, it's considered, when it first crosses the 20, crosses the 50, is a bullish cross. Continues to cross. Then when it gets to the 200, it's a golden cross. A lot of people like to do the 50, 100, and 200 and drop the 20-day. I like to have every piece of information, because then I can see a short-term trend flipping a lot quicker than the 50-day. Now, once you end up doing this, see, we never end up getting proper confirmation. We broke up, didn't backtest, it fell through. In fact, we came through and got rejected here. Then we had a bearish cross, got rejected here, came all the way through. And now we're just riding down the bottom side of here. But we had a death cross, and we tried to break out of it, and we validated the death cross, put in a head and shoulders, left shoulder, head, right shoulder, came down. Right now, this would be a validation of a back test breakdown on Bitcoin if we get rejected. Like, technically, this pattern isn't necessarily over. There's an FVG gap at 92 and some change, which is a fair value gap. That's another story for another time. But these tend to fill at about a 90-something% clip, not to be mistaken by a CME gap, which may or may not be filled. Maybe 57% of the time it'll fill. But you can use the CME gap as a placement point of a reversal, and then that either becomes a resistance or support, and that will confirm a move down. So we don't know with XRP if that's exactly what happened with the CME from Friday. That was at, what did it close at on Friday? I don't even remember now. Was it like 247 or something? I can't remember. I don't think this week was the 254.7. But anyhow, I digress. So now, with the exponential moving averages breaking down, well, it's like you want to have a better understanding. So what exactly is an EMA outside of what I just told you? Well, it's the exponential moving averages for one. But here's the definition. So the exponential moving average, EMA, is a refined moving average that emphasizes recent data points more heavily, offering a crucial edge in tracking price dynamics. Unlike the simple moving averages, the SMA, which distributes weight equally across data points. The EMA techniques give it a distinct advantage in responding swiftly to price fluctuations, which is why I never use the SMA. You'll never see me use it. This makes it an essential tool for traders seeking, just like you won't ever see me use the RSI, use the stochastic RSI. It's more volatile to price movement. Again, a different story for a different day. For traders seeking to capitalize on the most current market trends and movements. An exponential moving average, EMA, is a moving average that places greater emphasis on recent data points, blah, blah, blah. I don't want to read through all that. I want you to see. If you want to see the formula, there's the formula. So EMA today equals value today. Smoothing 1 plus days, EMA yesterday, blah, blah, blah. And you can go back and we see 20 days, 50 days, 100, 200. So while there are many possible choices for the smoothing factor, the most common choice smoothing is 2. That gives the most recent observation more weight if the smoothing factor is increased. So you can change all your stuff, obviously, but I tell you to keep it basic. I'm doing it I'm not going to the advanced formulas. I just want to see a basic understanding of what's going on. So the calculating needs one more observation than the SMA. If you choose the 20 days for your EMA, wait until the 20th day to get the SMA. Then use the SMA as the first EMA on the 21st day. That's not actually a bad idea. But they're doing a calculation. We're not going into the advanced. Let's see. And you're looking for trends. So like you're not looking for like, hey, I'm going to use this to buy a quick swing trade. But so the moving average is for trending. So EMAs are commonly used in conjunction with other indicators to confirm significant market moves and to gauge their validity. For traders who trade intraday and fast-moving markets, EMA is more applicable. Quite often, traders use EMAs to determine a trading bias. If an EMA on a daily chart shows a strong upward trend on an intraday, trader's strategy may be to trade only on the long side. So that's just basic. So I don't want to take too much of our time with that, but actually there was one more thing I could have did. We can watch a visual representation. Of course, after the ads, because what wouldn't be appropriate without an ad? Welcome to Tom's Army Juice. Thanks for being in your first month with the emoji badge of me being abducted by aliens. I'm honored. If you're watching, make sure to hit that like button, as we have half of you hitting the like button.
The moving average is a tool commonly used by traders and technical analysts to analyze the price movement of securities. The moving average is simply an average of a series of data points over a given period of time. Traders use moving averages to smooth out fluctuating data in order to identify overall trends and cycles. There are two types of moving averages that are most commonly used by traders: the simple moving average, SMA, and the exponential moving average, EMA. The simple moving average is the mean of the data points. For example, if you were using a 20-day moving average on stocks, the price for each of the past 20 days would be added together and then divided by 20 to generate the moving average. As new price data is added each day, the 20-day moving average shifts forward, always using the latest 20 available data points. Each data point is weighted equally in the simple moving average, regardless of whether it happened yesterday or 20 days ago. Similarly, an exponential moving average will also take an average of the data points over a given period of time, like the simple moving average. However, the weighting of each data point is not equal. More weight is given to the most recent data, and the weightings decrease as you go farther back in time. In other words, the exponential moving average treats recent data as more relevant,
most important part,
compared to historical data. In investing, traders are always looking for signals to buy or sell. By weighting recent data more heavily, exponential moving averages can give traders clear trend signals faster than the simple moving average. However, this can also increase the number of false signals. For this reason, many traders use an exponential moving average in combination.
It sure does.
With a simple moving average.
Remember, sometimes simpler is better. Simpler is better. So, would I short Bitcoin right now, Scotty Trades? Not. I would probably wait until 104.3 and see how it reacts there. At least see if we get this rejection. Plenty of room in the stochastic still. And in theory, we should come up and touch this wick at least, which we're almost there. So I guess I can't hate it. But we could come all the way up to 105.3 even in a bearish scenario. We could come all the way. Remember, though, I mean, we could come up to this gap point here, possibly. And it's not like a technical gap, but it's just the way it wicked down and through. It never came back up. I would always like to see that retap. If it's going to not get retapped by a significant resistance. Volume's increasing in the 4-hourly for Bitcoin. I mean, it's not staggering volume, but it's definitely increasing. That's a bullish continuation candle, at least for the short term. This still I believe the charts probably still have room to the upside. Anybody saying XRP's pulling significant volume, it's not. As far as trading volume. The dump volume on XRP, on this particular exchange in the 4-hourly, on these bigger candles was 12.29 in 4 hours, 10.48. The reversal you don't much need to look at, but you want to look at the climbing candles now. So we have right now 21 minutes left. We have 4.2 million, which means this will probably be a 4 or 5 candle. 1/3 the volume of the initial drop candle, roughly. And then about 45% of the volume on the biggest drop. That's not what you want to see on reversal candles. You want to see these, unless we get a big candle spike, you want to see some big volume. Let's look at it on a different exchange. So on the sell candle, 199, because all these exchanges have different volume, and 3.69. You get the same data, though. On the pullback, 541, 577, 705. This isn't going to get the job done. If we want to have that's a pedestrian. On this exchange, it's like 5-to-1 volume on the drop compared to the bounce back. Let's see if any of them pull back in XRP's favor a little bit stronger. 40, this is a better one. 45, this will be a better indicator. 45 million, 51.8 million on the big drop candle. We'll fade out this one because it was up and down. Now we start reversing 19, 28, 24. Ooh, we're dropping in volume. I can't imagine this is going to pick up 4 million in volume in 20 minutes. Maybe it will. Maybe we'll get a big spike. But that's not good. That's half the volume. That's not even half the volume. That's not what you want to see. You want to see volume predicting the price. This is a pedestrian. For having that big of a drop, to me, it's a pedestrian bounce back. Maybe it follows through, but this is telling us we should get a tracement down to like 179. After all, resistance, support. Like we've talked about why we did this and the way we did. It's actually supposed to be like right here. Let's make sure we get this proper. I know it's going to be like within fractions of a penny, but whatever. It needs to be proper. Just like here, this needs to be proper. It all needs to line up in a fashion like it's supposed to. Otherwise, when it bounces back, we're never going to be able to see it. Because right now, we can talk about the trading ranges, but really, the real range is right here. We're trading between 267 and possibly the low of 179 if we go out until almost mid-November. I still thought this is the time of consolidation. In my humble opinion, the same message I've preached for the last 9 months, mid-November is when we should get the real process here of what's actually going on, where we should start to reverse in our favor. If this does what I think they're going to do, or what would be the maximum pain, I would drop this right to $1.79 after this little push up. Maybe this comes to 240, or maybe that it stops at 232.7-ish, where Scotty Trades had that diagonal support on the 61.8 fib extension before it fell through. So now maybe that becomes a resistance point. But I'm very much looking at this setup here more than anything else, because it's giving me a proper range after that immaculate drop. You know, we've got I've looked at this, maybe it's in a channel or stuff like that, and I don't know, it makes more sense the other way to me, if I'm being honest. Yeah, we had the breakdown in this. I want to see this pattern. I want to see it figure it out. So I'm not going to keep this chart right here right now. I want to see this figure it out. Because what's going to end up happening here is we still got to get past, even if we come all the way back up, we've got to come back past here. So for this chart, the significance is being in there and understanding that we've got that long back test that was in the broadening wedge. That can bring it way farther down, but I don't want to look at that until we were to come past 178. So right now, at least for now, this chart and that $4 and the $18 and whatever can happen there, that chart's got to be absolved right now, even though it's very much still in play. Could be a big bull flag setting up. Nobody really knows. Might have to fill the devil's wick. Nobody actually can tell you because nobody actually knows. All I know is this volume is pedestrian at best, and it needs to pick up. It needs to pick up. Without this properly picking up, we have a death cross where we've been rejected. We haven't had the full formulation of that drop through the death cross. Right now, the 50 is on the verge of crossing through the 200. Right now, we've got a signal that we've broken bearish. You get confirmation when the 50 goes through the 200. You get ultimate validation when the 100 crosses the 200. But oftentimes, by the time you get the ultimate validation, you're getting ready for the nice bullish reversal now. So now that's why it's a lagging indicator. That's why I like the 20-day. If you're just looking at the 50, you haven't even got the actual signal yet that you have a death cross. Look how big of a lagger that is. With the early indicator, you've got a real signal there. It told you right away, like, oh boy, like, we got some problems here. And when it came back up here, even if you missed the big drop, it had the death cross rejection. So you were able to watch this from $2 and almost 70 cents and be like, hey, that's our early indicator warning. And we got rejected at the 100-day, and now we're in some trouble. And you could have theoretically used that signal and been like, I got to get out of this, or I'm going to wait to buy. And then you had this big drop. Now, you break it into the weekly, and the weekly is ugly. The weekly's ugly. We can say whatever we want. Until we break this formation, it's ugly. We got to get out of this. We got to get outside of ourselves here, because right now I got boom, 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 and possibly boom if this happens. So what am I saying there? That's the 4 tops to a topping reversal. I could argue in the weekly you've got shoulders on each side and a head on each side for the M topping reversal. Really widened. But you can make the argument that, hey, you know, we got to get past this point. Otherwise, we got a problem here. And that doesn't mean it's the long... The problem is coming back down when we would just think we're just going to reverse here and go all the way up. And then we still have to revisit the $1.77 to $1.82. And worst case scenario, we got to fill out the devil's wick, because how often do they let a whole bunch of people on leverage getting a gift like that run into a bull season? Normally you get another shuffle before. Maybe this was our shuffle coming down to 206, but I would like to see more volume. This volume is embarrassing. After a drop like that, I mean, it barely even registers. It's very little volume. We need a big volume spike. Give me some volume. If we get some volume, I'm very happy. Very happy. 4 hourly looks great right now because it's having a little bit, well, not great. Let me rephrase that. It looks good because we have to come up to our next point. You know, we still have to come up to the point we were talking about. So, in that sense, it's okay, but we need some volume. I need some volume. Give me some volume. Please, anywhere. Where's the volume? Look at the sell volume. Where the hell's the buyback? That's not good. Do you see any buyback? This is just the stepping stone to hell if this continues. So, we'll see. Oh yeah, don't get me wrong, there's some tokens. The privacy tokens are absolutely having a surge. I had Rose on here. I don't know where it went because it's on my phone and on here. But there's Rose, which is a privacy token, which hasn't had its day yet. It had a nice little drop. But it's really the only one I've been watching. But I don't know if it's going to end up having its day like some of the rest. It definitely had a unbelievable pull down. That's another privacy token on the Oasis. But they focus more on DApps and things like that. So... But I don't know. I don't really talk about them much, which maybe I'll talk about it more in the future. But Lanita's up 9% today, which is a nice bounce back. Let's see if we got any kind of volume here. Man, that volume is so low. Why? Why? Like, what? For what reason is the volume so low here? Like, where is all this? Maybe it's shifting in now. This is good, though, because we're breaking back maybe over this channel. Oh, no, we're right at the top. Oh, we're kind of over it. We'll see what happens here. We'll see if we get a nice, profound rebound here. Band seems to have settled down here after coming down into the low 40s. It was right about 41. It settled down here a little bit. We don't have a lot of volume, though. I'm trying to find some anomaly here. What about Proton? Yeah, there's no freaking volume. This is insane. For having as big of a drop as we did, to see such little buyback volume is pretty insane. That doesn't mean we can't have big movements, though. I want to see some, and I like the drop, though. The drop gives me more faith that we could move out of here than I had before. IOTA, we've talked about this. We got to get back over 13.15. That's a big spot. We're coming up to our resistance zones across the board, so it's going to be a big area to watch across the board. Ethereum eking back up towards that. Oh, now it's on the bottom side of here too, but 35.31. We talked about 3,076. Remember, if we fell through, look at that. That was almost dead on. We did a great job there. I mean, that was almost onto the dollar. That was our next drop, and that was our in-between to see if we could hold and not fall all the way back to like that 2,300 zone. Because right now, we very much are built... Here, can I show you an example of what could happen? So, First Majestic had great earnings. I think it had a record amount of silver. And it had this formation built. And now it was coming up. And then it just dropped off because it's finishing the move. Like, we have a lot of the similarities when it comes to crypto, that we had a lot of these head and shoulders or topping reversals, and we're like kind of waiting. We've got this whole thing built out, but to reset, we'd have to basically, if this wants to fully reset, you'd come all the way back down here. So this is why this was a very important stopgap measure at 3,076, which it's held initially. But one of two lines of thinking. One, it holds there to get the rejection at 35.31 and prove bearishness. Or two, we overran and now we finally got the bottom we were waiting for. And this just overran. And you got a wick here that extends out. And then you've got this pattern that starts here and extends out. And then you've got something like this forming. So how do you know? You don't. You have to see how we react at 35.31 and take it from there. But having the understanding that the drop point could have been at 3,076 and it coming to 3,058 within $18 of that that's a good understanding of what's coming, because that's been on there since we were at 5,000 roughly. So, you know, these are all levels we leave in the chart because it comes back. So it doesn't always rhyme with the movement up on the way back down, but you often fill these areas of support that used to be resistance. Like, we had a strong history here with these levels. So if we're on the top side, it's good. If we're on the bottom side, it's dicey. So that's why this is very important today. Everybody who's in here right now, I'm very proud to have you in here because it's a very important day today. I know there was a lot of red, but now there's some green. Now we have to understand the levels. So right now for XRP, like we talked about, that 232.7, if we can get some steam here, should be a very big opportunity. Obviously, we can't come right to 262. We have, which chart was I drawing that out on? So first we'll have the 20-day coming up here at 2. Well, it's still that diagonal support that was at the 61.8 extension on the fib. That's 232.7, I believe it was. That sits in my head. Obviously, the 20 days right in the same area in the 4 hourly, but that's what's sitting in my head. If we can't get past here, or if we get past here, we could very well try to make a run back up to 247. Try to see how we react to the death cross. But remember, if we don't break past here and start pushing bullish, our next objective is going to be down to $1.79. Like, if we start pushing back down, that's going to be our next objective here. But yeah, there's also the viewpoint like biotech said as well. It's going to eat the shorts all the way to 285, which that honestly is not out of the question. That is not out of the question. It's definitely eating into the shorts right now, that's for sure. Juice, I'm proud to have you here as well. We are the future indeed. I appreciate you saying that. I believe it. I believe it. Go to the gym, bro. Thanks for being in Townsend for your second month with the Dusty's Out House Crypto News. Says right now there is no breath in the market. Can we even pump without fizzling back down quickly? That's the question. With volume like this, it would suggest probably not. There's still, remember everybody, we still got the illusion of a possible rate hike in December, which is so crazy to say. Quantitative tightening ending December 1st. This is why you have to pay attention to this talk by the Fed. And even if it is only an 18, you got to pay attention. Because if the Fed were to raise rates, even if it's 1/4 of a basis point, while simultaneously ending on the 1st of December, quantitative tightening and expanding into easing, that means as they print that new money, believe it or not, they're immediately going to raise interest rates. So that would be like you going to get a loan, agreeing to like 3%, let's just say. And before you make your first payment, it goes up to 3.25%, 3.25%. If that happens, risk assets are going to take it so far down. We're going to be depantsed. But then I think in January, we would have the most immediate rate cut we've ever seen. And the expansion of quantitative easing. And Jerome Powell would probably be fired in this time period. And the Dow, risk on markets, even gold and silver probably would all crash even farther. And then you'd have the most majestic reversal going into a lot of, because you have statewide elections this year, which who cares? But you have the broader elections across the country that's going to get all the peasants up in a roar. And like just a simple, this is my simple message about why it's not worth fighting over the right and left. It's really, really not. Because this is exactly what you are. This is it. The right and the left are each one side of the devil's horn. The people are being controlled. We're being manipulated. You got Trump, the Democrats. It doesn't matter what side you're on. And I just said Republicans, Democrats are each one side of the devil's horn. The people who preach one side of the, well, you're playing out the devil scenario, which is owned by the central banks, running their propaganda, and we're none the wiser. And like, to me, it's the end game. I don't even need to read it. I can tell you what the end game is. All this political divide, it keeps you out of the light. You're not paying attention to the AI and robotic overtaking that's happening right now. In China, you can buy a robot for $1,370 approximately in American dollars. And the robot can clean up after you. It can do basic tasks. Like, it's starting. It's already starting. Like, what comes in 2028 is scary. And the fact that they're changing our digital way. So they're changing just the way we get to do things. So we've got to stay ahead of these markets. The bottom line is we've got to take advantage of all this before the end of 28. This is going in a very scary direction very quickly. And by mid-26, about 2/3 of the workforce you see today that's automated is not going to be available for us. That means like a lot of the grocery store jobs, and people think it's a joke, but if you're low skilled, and we all started out that way, so you have to take it upon yourself to try to figure something out. They're starting to do like these racking systems in the grocery stores where I only know about them because my dad is the one doing it with the companies with. He's got to go from state to state, and they're in warehouses. But they have stacking systems now, so the warehouse workers, instead of them doing it, it's a stacking system. So the robot basically is able to fill each and everything that's emptied. So imagine somebody goes into the back room, getting something off of a pallet, and then somebody else used to have to replace it. Well, now it's in a racking system. So you got one guy who takes everything out, and the guy who was supposed to put it back is now that's automated. Well, in the grocery store, what's about to happen, and you're starting to see them in casinos and other very interesting spots. You go in and you go to buy food and stuff, and you got a scanner when you walk in, right? There's no person on the inside. Nobody's doing it. You're just taking it out of a slot, and then it automatically gets replaced. That's a racking system. That's what's happening. So these are things that are happening. And, you know, so this is a very big opportunity for us, not just in crypto, but understanding charting and understanding just this kind of stuff. So it's a very important moment for all of us. This is the time that's going to either make us or break us, because a lot of our fellow humans don't understand this stuff and they're going to be broken. We can succeed. It's a very scary time, but remember, if you have monetary power and you don't have to live, even in the worst of times, remember the time of all the peasants, which we would have been. Remember all those times. The ones who were wealthy still lived like kings, right? Because they didn't have to succumb to the normal nonsense, the political nonsense. They didn't have to sell themselves out to get a loaf of bread. That's why your time, your knowledge, everything we do here, it's a very important. It's not just, I want to get ahead in crypto. It's a lot deeper than that. That's why I know we have to be our own central banks, and with our profits, we have to buy gold and silver bullion. You know, you have to understand who gets it out of the ground. In crypto, I love it, but it is not a store of value, and they keep feeding us it because they don't want us to have the proper store of value. They don't want us to protect our money against inflation. I love crypto. I absolutely love it because you can make money so quickly. You can lose it quickly as well, which is why it's not a store of value. But you start to expand it into your own money supply. So you make all this crypto gains, and then you start putting it into a store of value. So then when crypto starts to, and it happens, and gold and silver will go down, but it's at the rate of return. I mean, oh, gold and silver is going down. No, the U.S. dollar is being overly inflated conveniently at the time when it was overbought. They do it all the time. And now the dollar has to make its epic return rally. Which, epic, it won't be that epic. But everybody's getting rid of U.S. dollars and bonds. So they got to make it look like the U.S. dollar's got some steam here. We've talked. And we'll continue to. But anyhow, let's get back onto it. Craig Carlson said, everyone needs to hear what Larry Fink said at the roundtable yesterday about the tokenization of everything. The big banks were present at this table. Oh, it's happening. It's absolutely happening. Oh, yeah, you can make a lot of money on silver right now. Here, let me let my cat out. My cat's having a hissy fit. Come on, girls. I'm not here. Come on, you can go outside. Hold on, Walter. Yeah, my squirrel friends are running outside too. I noticed, so I had to throw them some peanuts. As I've said, with rising layoffs and rate falling, inflation, there is no catalyst for a rate increase. Yeah, it seems bizarre that would even be part of the discussion, but that could, I'll believe it when I see it. We're talking about an angle there, John, if they actually did it. Could be a very deceptive tactic. And thanks for being in Town Zone for over 1 year at the I Told You So badge. Hood, thanks for being in Town Zone for your first month. Says Tom speaks the truth. I try. I wonder what Brad Garlinghouse said at the Swell event. Is there any live, is there anything that we can watch real quick? Swell. I'll just say event, even though it's technically a conference, I suppose.
Without intermediaries over the.
Okay, now the question is this real? Am I watching the real one? Because a lot of people are gonna have fake stuff here, so this kind of seems like. I never like when somebody has a barcode right at the front. See, this is the problem with AI and the problem with YouTube. They don't censor a lot of this stuff. So, like, you got some fake stuff going on, it looks like. I don't know. Or maybe somebody will enlighten me in the audience. Yeah, I'm going to wait on that for now. Let's see. So much for the gifted first one ever. Oh, yeah, you got a gifted sub, Bird's View. Congratulations with the emoji badge of me being abducted by aliens, and that is my face superimposed on that emoji badge. Says thank you so much for gifted first one ever, guys. Don't panic. All will be fine sooner or later. Oh, that's true. We're not done yet. We're not done yet. I don't believe that this market's hit its highest of highs. I just don't necessarily think that this drop was the end all be all. Hopefully it is, but I'm not convinced that it is so far. And I really wanted to see a more profound bounce back. Yeah, in the Ripple market cap, we've gotten some nice little bit of movement here. Not as much as the drops though. That's the concerning thing. We had 140. It wasn't much different though. I mean, you're talking about billions of dollars, so 146, 145, 44, 43, 42, 41, 40. The buyback 140. I mean, it's mixed. It's a mixed bag. So, but now in the 4 hourly, we got oversold or overbought really quickly in this stochastic. We'll see how this plays out. I want to see more volume here. If I'm just being honest, I want to see more volume. Let's see how the liquidity map lines up while we're still all together today. We'll take a look. We thought the crypto fear and greed index would end up very quickly in extreme fear. I'm still looking for that catastrophic drop in the crypto fear and greed index. And what I mean, if you go back to 1 year ago, we had this overall, well, not 1 year ago, but earlier in the year before we had the just a big reversal here. That was on February 27th. We were at 10. I'm almost looking for us to melt down and re-tap that amount of fear that we haven't been back to since the rise back up. I'm almost looking for a similar, like, oh my God, it's over kind of clear out. Because it looks like we're building a bear flag in the, it looks like almost a bear flag getting ready to drop to the next layer in the fear and greed, which would be great. If it drops down to 10, I am going all in. Like if we make this next drop, that's where I get very, very interested. Not saying I'm not already interested, but my real interest, a deeper interest, where I might implore the real capital that I really want to implore, would be if we get a rejection here in a drop. Yeah, right now it's getting interesting right now, actually. We're getting interesting. We are getting interesting. It is getting very interesting. We do have... It's going to be interesting. Because, like, now when we talk about higher lows and lower lows, if we start looking at it on a monthly... We've got a lot of room here. If this is a low, we've got a lot of room to drop. We could still make a higher low in the monthly after this, but you know, we've been on the same area, the same path. I'm curious to see the way this either holds or doesn't, because we never in the weekly, we came down once. We've never fallen completely through again. We came through the 100, but we're buying our way back up. Yes, we got a lot of rejections on the 20-day, but that's often the signs of a, you know, an under-inspired market at that time. It won't always be like this. It won't. The market won't always be uninspired. So that's what we have to watch today, what we've talked about during this live. There's only so much you can give of the information in a given segment. Bitcoin dominance came up, got rejected a little bit here. We'll see if this is an expiration wick and then it starts to come back down. Or if this is like a little flag building out, we still have to push up. It's going to be a big indicator here if Bitcoin dominance rotates back down. Remember, though, we're above the daily 200. So we're on the top side of a support side right now. And we've had a crossing of the 20 and the 50 day now. And the 100. So the 20 crossed 50 and then the 100. And we'll see how we react here. Bitcoin dominance is a big key right now. We seem to be really riding Bitcoin's tail. You know, we're riding the coattails off Bitcoin right now. Came down like it was supposed to that area. Now the question is, are we coming up for a rejection, or are we going to overtake this? Right now, we don't have much upward momentum in this candle, but there's still a lot of time left. We still got 7 hours and 51 minutes. And what I mean by upward is the candle from yesterday. We're not even halfway back up. So we got more downward pressure, obviously, as of right now. With the micro now in the last few hours pushing back up. D-Raw said, I told him I'd inherit the Digibyte OG title for him. And so far, it's been great. We'll see. It depends where you bought it, for sure. Depends where you bought it. But yeah, continue going. What does that say? Breaking. Oh, who cares about that? Let's see. Trying to see anything else. I'm interested to see how this plays out for Bitcoin, because that could theoretically drop Bitcoin to 75. Now this would be a moment in time where does Bitcoin start to shake out the rest of the alts, or the alts finally take that collateral and start moving up? That's the big question. For me, that's the big question. Let's see. I don't know. We're in a good spot, though. We're in a good spot to get this data now. That's for sure. Not to sound like Jerome Powell, but now we have to wait and see how the data unfolds. It's a good point. We're going to get a lot of information here in the next, like, 24 to 72 hours. Oh, it's going to be beautiful. Sounds good, my love. Oh, yeah, we definitely need to come up in the short term. There's no doubt about it. I hope this is like, Scotty, I know you know, if we could overtake and get some bursts here, we could start to really reverse this in a very quick way. In a very quick way. Oh, I hope Trump didn't make this. I don't want Trump to say anything to artificially rise this. Let it do it on its own accord. We can't have that false during illusion. What did he say? We don't want any false during illusion of why we're starting to have a return rally. It's not a store of value. Bitcoin is not a store of value. It doesn't matter what anybody says. It's not a store of value. It doesn't even mean it by definition. It has no utility. A store of value is something you can hold, and it's something that has a purpose. Bitcoin's purpose is to send money from me to you, and it's expensive as hell. XRP can do the same thing for fractions of a penny and way faster. It has no purpose. That's why I argue with anybody that says, oh, we need Bitcoin to move money. What? You haven't been paying attention. We haven't needed Bitcoin to move money since the infant stages of XRP and the others. Hell, once Ethereum came out, you didn't need Bitcoin. Ethereum's way faster and cheaper, even though it's still expensive compared to XRP. And Solana's way faster than that, but it has a bunch of problems. So, I mean, the only point of Bitcoin is to see if somebody will pay more than the last person. There's really no reason for it. Let's see. It's a transfer of wealth, some people say. Some people say it's a trap. Like I said, I'll believe this as the real deal when it starts to show me the volume. Not to be pessimistic, but I'll believe it that this is our real breakout when a few of what we talked about starts to happen. I could see a lot of people getting trapped here again in leverage, not spot, because every time you have big drops like that, it's never a bad time to, even if it's just a swing trade, when you see big wicks down, it's never a bad time to try to do something if you have the conviction and you understand. But like Scotty Trades always says in the Telegram, if you don't understand your buy-in, your stop loss, your sell out, your profit taking before you ever enter a position, you're gambling. And that can even be in spot too. If you buy in and you don't know if you're just doing a quick swing trade, if you're doing a long hold, if you're going to appreciate and accumulate for the future, you know, you want to know all these things before you buy. The most common question I get, and the answer will always be no. After all, I'm not a financial advisor, and this is just what I am doing, after all. I can only do what I'm doing and tell you what I'm doing. I can't tell you what to do because I'm not a financial advisor. But everybody always says, Tom, would you buy here? Well, the fact you're asking me, no, I would not buy here, because I want you to be like, Tom, this is what I'm thinking. I think I could buy here. Here's my reasoning. But are there any structures lower that you would be like, okay, if I am buying here because I really like this asset and I think this is a good deal, is there any amount of money that I should have to the side because there's a percentage chance we could go here? Well, if you phrased it like that, I could be like, well, there's about a 35% chance we go to that next lower level. So maybe, you know, if you want to make a purchase, keep some money to the side so you can buy it to the next level, you know. So it's not as, trading is not a zero-sum game. So if you ask me a question and then you just base it on that, you're going to lose all your money because you're not going to know when to buy it. You're not going to know when to sell it on your own accord. What if something happens and all of a sudden the whole world goes to war? Well, we already know on a risk asset basis, traditionally what ends up happening, risk assets go way down. The stock market doesn't like it. Gold and silver goes way up. Oil goes out the roof. Electricity gets really expensive, so the energy companies start to spike. But anything that has risk attached to it ends up floundering. Any kind of problem in the world, any kind of shutdown, anything like that. Now, I'm not talking about the government, they're useless. I'm talking about the citizens being kept at bay. But remember, ask the right question. Yes, it's not about asking a question, it's about asking the right question. Yeah, the structure is Wyckoff-like, yes. And if you were talking 5 waves down, technically we're not done yet. This would just be the correction back up to what, an extended 4 now? The back down. But anyhow, technically, yeah. I mean, it's also we've got a lot of areas that we can go to for redistribution here as well. I mean, there's a lot of stuff. God is my master, not crypto, so pray don't gamble. Amen to that. Amen to that. JBHK, I don't know if DGB is a precursor, because DGB is synonymous for going 100% up and then just giving it all back if we're in a bearish time. So remember, DGB fell down from 1.2 cents all the way down to 4-ish. And now it's making its big rally just back up to the drop point. That right now doesn't seem to identify anything. DGB would need to get over not just 1.2, but get up past 1.8 to start to show that maybe this is a real market reversal. We were all the way up at 2 point something cents at the market top. And then it dropped way down back to the old bear market level. So we need to, there's a lot people need to understand with DGB. Like when I used to talk about DGB every day, nobody wanted to listen to it. Then when I stopped talking about it, everybody talks about it all the time. It's incredible how things work. Do as the goose, not as the, you know, it's one of the things. But I'm glad that people are showing interest. You know, and finally. But just remember that DGB is synonymous for making 1x moves just to come back up to its old level of drop from an extended bearish period. And then if it's going with the market, typically it gives it all back and then 50% more. So be careful. Make sure it gets over 1.2 and take profits along the way. Making a 1x return very quickly is not too shabby. There's nothing wrong with getting your money back in a very volatile part of the market and then just riding it for free. There's nothing wrong with that. John says never trade. No, I mean, that's true. Hell yeah, 78% is a great ride on DGB. That's a blessing. That's what I'm saying. Make sure you put some of that in your pocket every now and then. Maybe not at 78% if that's not your goal. But, you know, start looking out for yourself too when you're in the crypto. How many times have you been up 70, 100, 150% not taking anything just to see it go down and rinse and repeat? That's a great return. It's a great return. It is. DGB still has my heart, and because I like DGB, it's just what happened. You know, it's just what happened. So, you know, like when you've been burned by somebody and then you can never get the trust back, or they've got to do something extraordinary to even, you know, get you to even flinch. That's how I feel now about it, and it's a shame. But Citadel Fortress back. Ripple's 500 million raise at 40 billion valuation. Blockchain payments company Ripple has been valued at 40 billion following new equity investments from Citadel Securities and Fortress Investment Group, underscoring the growing appeal of blockchain technology among mainstream financial institutions. According to a Financial Times report on Wednesday, Ripple raised 500 million from several investors in its latest funding round, which cemented the lofty valuation. The deal signals a broader shift as established Wall Street firms move to gain exposure to the digital payments and blockchain sector despite ongoing market pressures. And I think these expansions of XRPN, XRPNU, and XRPNW is where a lot of these institutions are going to find their bread. Even if they don't want to go into the crypto market, they can do it right in their own comfort of their own firms on the markets of the stock market, the NASDAQ. They can do it where they're most comfortable and most experienced. Other investors include hedge fund Brevin Howard and crypto-focused venture capital companies Pantera and Galaxy Digital. While Ripple is best known for XRP token used to facilitate fast, low-cost cross-border payments on its XRP ledger, the company has increasingly pivoted toward developing stablecoins. The Financial Times highlighted Ripple's work in the area as a potential key driver behind the latest investment round. As Cointelegraph recently reported, Ripple's RLUSD stablecoin has climbed into the top 10 US dollar-denominated stablecoins less than a year after its launch. Institutional interest in crypto continues to grow. Ripple's latest fundraising round is part of a broader trend of increasing institutional adoption of blockchain technology. Several crypto-native companies, including Circle, Gemini, Bullish, and Figure Technology Solutions, have made strong debuts as publicly listed companies this year, reflecting renewed investor confidence in the sector. Meanwhile, BlackRock has reported significant income growth from its crypto exchange-traded funds (ETFs), underscoring the expanding appetite for digital asset exposure among traditional investors. Elsewhere, Goldman Sachs and BNY Mellon have entered the tokenization market, offering institutional clients access to tokenized money market funds and other blockchain-based financial products. This wave of growth has been supported by a more favorable regulatory climate, including the passage of the Genius stablecoin bill and ongoing progress towards a comprehensive U.S. market structure legislation which aims to provide clearer rules for digital assets, which means tie a noose around your neck and limit your gains going forward in crypto once this all goes into play. Just remember that. That's all it means. That's all it means. I'm XRP Future Millionaire. I think I'm going to call it a day here. It's been a great day. It's a great live. Love all the people in here. Really appreciate all of you that are in here. And it makes me happy to see all of you that are very interested today, very in tune, very in the moment. But just remember everything we talked about in this. Please. Remember everything we talked about. Volume, above all, dictates price. Volume dictates price. In the pinned comments in this very live, for whatever meets your expectation, no matter what region you're in, TOOBIT I personally like at the moment. I understand that there's some people that can't use it. I'm always looking for something different for everybody. And if there's ever something better in the USA that I can look at, I will obviously talk about. Right now, WEDGE for IOTA, BITUNIX I still very much encourage. It's just, it's harder and harder to do things that you want if you're a newer person. But if you understand the no KYC realm, BitUniX is a beautiful place. I still have several $1,000s I trade on there. For WEX, I like it for IOTA only, even though it's a beautiful exchange, but I only keep my IOTA stuff in spot on there. Now they do have Rose as well in spot, which is maybe another something that I had before that I might buy. I don't know if I'll rebuy it back or not, but that's on WEX as well. And then TOOBIT is my go-to right now for the spot and leverage trading. Same thing with BitUniX though, and they're all similar. So that is all pinned in the video description below and our pinned comments. I won't tell you which one is better than the other, but for the USA, TOOBIT seems to be pushing more in the USA. As you start to see less interest by BitUniX in the USA, that's the only thing that I can see. But they're all no KYC exchanges, which means they're worldwide. So I encourage you to use them outside the tier 1 exchanges just because it gives you more volatility and more ways to get in during the volatility, mostly is what I mean to say. So be blessed, everybody. Thank you all so much.